In last week's video, I said, expect Monday to be a bearish day, and I gave you all the details on why. And sure enough, Monday was a bearish day. However, the market's rallied due north since that time. We're looking at the S&P 500, but Friday we had a major sell-off in the markets. Nasty little drop, over 1% on most of the major indices. But we're looking at the spiders, S&P 500. And if you look here, we had this, there's our Monday sell-off, and then Tuesday, Wednesday, Thursday was great, and then Friday there's the sell-off. So we had a nice rally to the upside. Monday was the big sell-off, but Tuesday was an about-face, straight-up breaking a major trend line, everything going bullish. Remember how we talked about the bounces taking place off of those support levels of the VIX, and the VIX bouncing. So sure enough, that's what we got. But then the VIX came crashing back down. Watch this. If I go immediately to the VIX daily chart, take a look at this. You can see this. The VIX popped up on Monday and then come crashing back down Thursday, Friday. If you look here, Thursday we bounced up, and then Friday we're caught up here. But do you see how these we've got this support here, especially on this line coming across? It's saying that this dude is ready to, it's a falling wedge, guys. The markets, I think, are getting ready to pop. That means the VIX is going to pop right here. I'm sorry, the markets are getting ready to drop. The VIX is going to pop. That's what it looks like to me. But there's a lot of indecision at this moment. So I like to go over here to the NASDAQ, look at the daily chart there, say what's going on. NASDAQ had this falling wedge, symmetrical triangle type formation, boom, and then boom to the upside. Really, really nice. And then Friday, lower high, lower low, big drop. Big drop. So the Russells, you do this, big run, lower high, higher low, inside training day, but we're within the confines of this rising wedge. If you look here, this Monday, it broke this rising wedge to drop bearish, but then Tuesday we rallied back higher. Again, this is Russell's 2000. So there's your jab, and the jab got really bullish right after that. Jabs can show a significant reversal when they happen. If you look here at the financials up, and then you can see Friday, Thursday it popped way up, gave us a hanging man type formation. Friday we came back down, closing at resistance, guys. So on the daily chart, on financials, closing at resistance. So is this a jab to the upside? It could be a jab to the upside on financials, meaning this, that you go up, very extended to the upside, and then you pop above it like you're breaking resistance, but it immediately comes back down. There's your jab. You got a significant sell-off thereafter. So this is what I'm watching for. It could get slippery and fast. So just keep your eyes on that. And a quick look here at the US dollar. If you look here at the US dollar, Thursday, if I blow this up, this daily chart, we dropped down. I'm going to do this, raise this up. I like to tighten up these trend lines. Trend lines are a science, not art. And you have to have those like spot on. If you don't have them spot on, they're useless. So be spot on those. There's 3 different type of trend lines that we draw. I show you predominantly just one trend line type of trend line. There's 3 that we teach in the mentorship. But I do have a trend line course. We give those away to the people who subscribe to the algos. So we do have an algorithm thing. We have a class coming up February 11th. If you want that, go to groktrade.com/algo. Click on the next webinar to learn about the algorithms and to learn about artificial intelligence and how it's coming into finance in a very significant way. But look at Friday's big pop on the US dollar. That's what's going to kill equities. That's what's going to kill commodities. So that run that we got Thursday, Friday is going to put major pressure, because Thursday was the big day where the markets were very bullish, but you saw the US dollar also go bullish. That was a tell. That told us that things were going to be bad. Friday, sure enough, US dollar opened and then broke out to the upside. lot of buying taking place on the US dollar, and that's going to play havoc on the markets. Just like you see right here. You see this US dollar is up 1%, everybody else down 1%, you know, or thereabouts. So that is what we're looking at. And if you go over here, let's take a quick look at gold daily chart. Thursday, we broke the trend line. There I said, remember I said rising wedge, if we break that trend line, you guys go back and watch those videos. I said if it breaks it, watch out below. Sure enough, Friday, a nasty sell-off. There's the sell-off I've been talking about on huge volume, but we're at a support line. It'd be interesting to see what happens there. Silver, same thing, just a nasty. I mean, just Friday alone was almost a 5% drop. Thursday had a big gap up at resistance, right there at the resistance point, and sold in. I mean, that's the market makers right there. They know where these lines are. Those market makers will gap it right there to trigger in a bunch of buying of people breaking that trend line, and it triggers a bunch of orders. So they're selling into those buyers right there above that trend line. Comes down, and Friday big gap down, and I see just a little bit of support coming across. But it's just anytime you're dropping at that trajectory on that much volume, you don't want to be holding it. So I don't know how many weeks in a row I've been talking about being careful of wanting to get rid of your gold and silver. There it is. US dollars rallying. VIX, if you take a look at VIX, this is a daily chart on fear, guys. So fear's been dropping. But however, Thursday, look at this. Thursday we gapped down, run up. So Thursday, even though the markets are bullish, you had a big VIX or fear spike with US dollar going higher. But Friday, even though as bearish as what we were, VIX was lower. So everyone's in bearish territories, but the volatility actually decreased 2%. So that's telling me there's a lot of indecision out there in the markets. A lot of indecisions. So if you go to so what am I saying on all this? What's D7 thinking? If I go here to the S&P 500, let's go to the weekly chart. Take a look here at the weekly chart. If I look at this, this is what I know. What I know is this symmetrical triangle broke out 2 weeks ago, and now we're up another week, higher high, higher low. But look at this run we've been on. 1, 2, 3, 4, 5. 5 weeks in a row. It needs to take a breather, maybe plateau here for the next few weeks, going sideways, pull back a little bit to this line, but we cannot break this lower trend line right here. This trend line that we have on the weekly chart on the spiders needs to stay whole, needs to stay firm, needs to be support. And if not, woe to this market, because if it breaks these, this will be a death hook. We don't want a death hook. If we get this death hook, you're done. Markets put a fork in it. So I like to look at the Nasdaq, see what it's doing. Same thing. We had these trend lines, we broke it, and then we broke this trend line. So overall, in the bigger picture, bullish. Everything looks bullish on the big picture. Russell's 2000, does it agree? Yes. It agreed a month ago. When it broke out, that told us where the markets were going. Financials, does that agree? It's going higher, but not as much. Guys, if you look at this trend line, look at how many bars are staying right here, just above that trend line. In other words, instead of the ball hitting the floor, going up to the ceiling, and then coming down, hitting the floor, it hit the floor, now it's rolling on the floor. That's telling me that even though it looks bullish because it's going higher, that there's no conviction to this upside move. On financials, it looks like we have a really, really good chance of that weekly chart breaking down right there. And if the weekly chart breaks down on financials, the rest of the markets will also drop. They will also drop. So I hope that clears up some things. And, if I look here at Bitcoin cryptocurrency, guys, it woke up. I have an algorithm, trading algorithm. It had me in at $17,000 right here. Had me buy in. And I was away on a little getaway looking to do an acquisition of a property. And I got these alarms, just firing off. So I got in on it. And so I'm up, we're floating around $23 or 23,000. I think it got up to 24 at one point or right near it. Yeah, I think we got above it. So I'm up over 27% right now just on this one trade in just a matter of weeks. So really happy with trading algorithms. And so speaking of that, I'll go into this. Guys, if you guys haven't heard of GPT, you're probably starting to hear about it. It's taking over. It's artificial intelligence, and I'm imploring you. You need to wake up to the fact that artificial intelligence, AI, is coming into finance, has been there with the big dogs for many years. Now it's coming into retail traders. It will quickly separate those who do really well in the markets versus those who do not. We want the algorithms aligning with other algorithms, and the people that aren't associated with trading algorithms will be the ones exploited in the marketplace. So in other words, it's going to be it's going to get more difficult to trade in this market conditions because of the fact that we have so many trading algorithms all keying on each other using ML or machine learning. And it's taking back-tested knowledge. Those things are starting to correlate or will correlate. You need to be in that correlation. I hope you're tracking with me. Don't let this go over your head. I'll help you. If you want to know more about this, I'm doing a class on artificial intelligence going into finance and what this means to us and how we can benefit from this by being early adopters. But what you have to do is go to the website. You see it floating around on my video, but Grok Trade. If you haven't been there yet, go to groktrade.com/algo. Go to algo, and if you look down on there, there's a link that says next webinar. If you want a shortcut, go to /algo1, number 1. So algo1 will just bring you right to where you can register and get in on this. But it's February 11th at 7 p.m. Eastern Standard Time. But it's something to do. What you're seeing behind me is our home that we have. This is one of our homes, but we just unloaded this one. So this home is going away. We're here in Carmel, Westfield, north side of Indianapolis. And we're here packing it up. So this one's, we have a nice new family of owners coming in, and we're in Tampa. Tampa is our new home, and we're very, very happy in the Sunshine State, the free state of Florida. Love it, love it, love it. So that's what we're doing. And anyway, I just, again, just be part of the webinar. The webinar will help you out, and you have to register. If you register, it'll go right to your calendar. So if you click register, it'll just pop up. You're not going to get hit with emails from us anymore. That's old school. We don't want to send you emails. You hate getting emails. I hate getting emails. So it'll just schedule it right on your calendar, whatever calendar you use, and then it'll alert you that it's coming up. And so it's either you make it or you don't make it. And so anyway, and if you're on YouTube, follow us on YouTube if you're not a subscriber yet. So why should you listen to me? I'm not saying that you should, but I will tell you that I've been trading in the live markets nearly 30 years, 27 years. And I used to be with Rich Dad Poor Dad. I'm an award-winning stock mentor with Robert Kiyosaki and the Rich Dad Group. And now I own Grok Trade, an education company, and I've been competitors against them for over a decade. So I was with them, and now we're competitors. And we do all of our coaching and training online. And what we do is sizably what we feel is more value for a much a better tuition fee, right? The value is just sky high. So we give better product, better training, better education at a very reduced fee compared to what Rich Dad Poor Dad costs, or what their tuition fees are, and a bunch of others that I used to be associated with. But if you want the easy button, you don't want to learn how to do this, have that specialized knowledge, then that's fine. Go down the algorithms. Guys, the algorithms have made my life very easy. So I do this on an institutional level now, utilizing algorithms. It's the easy button. This is the route that you need to be going. I say that with great confidence that based off of my 3 years experience with using algorithms to trade my accounts, guys, don't miss this. It is here and it's easy to employ, to get going with. Take care. If you like it, leave me a comment. Always love seeing those. Take care, and we'll see you guys later. Bye.